right, welcome to the daily stock analysis for Tuesday, May 4th. Not going to make any Star Wars jokes today. Just going to jump right in here to a company that reported earnings today, which is Idexx Labs. And this company makes diagnostics products, other medical services for the veterinary industry. Now, as we all know, the pet business has been growing, not just during the pandemic, but well before that, and has a years-long history of being a growing industry. And you see over here the solid yearly earnings per share that has been reported by this company. So you see some growth, some growth, some growth, more growth in 2018, more growth in 2019, more growth in 2020, and that's expected again in 21 and 22. So you see a really good history here. And even in the quarterly earnings, we saw a lot of companies had a little dip maybe in the first quarter of 2020 or the second quarter. Now, it looks like the second quarter that ended in June, they did fine with earnings growth up 20% year over year to $1.72 per share. Did see a single digit item here in the quarter ended in March 2020. And, if you recall, that was when there was still a lot of uncertainty. Things kind of shut down there for a few weeks in March, beginning of April, when nobody really knew what was going on. And maybe veterinary clinics were closed. I think a few were, but they absolutely reopened very quickly as essential industries, of course. So you did see that, but it bounced right back, and we've had some good double-digit growth, and revenue growth as well has done very well recently. So let's go over on the chart here. This is a weekly. I'm going to put it back over to a daily. So this has been forming a really nice cup with handle, but today that got busted a little bit. Now, we could still see that as a continuation of the handle formation if it doesn't go on to undercut this low by very much. You really want to see the handle forming in the upper half of a base. This could jeopardize that a little bit, but you could see that resume. Now, here's what happened. Company reported earnings, and it beat expectations. Very positive earnings report. Could this be some profit taking? Sure. You do see that quite a bit after some earnings. Really, what I just want to show you today is how to look at a chart like this. Now, right now, this did appear ready that an earnings report could have sent it higher. And let's see, the high point of the handle, 5601. So yeah, you're looking at the high point being above 5601, 561 rather. 561 would have been the resistance you were looking for over here, and obviously that melted down today. So previously I would have said you were really hoping that the earnings report would have sent that higher. Doesn't always happen. Nonetheless, let's go back to that weekly chart. With these terrific expectations, 17% earnings growth overall for 2021, analysts see another 15% growth for next year. This stock really does look like a positive case, just not something you really want to buy at this particular point because you don't know how much lower it's going to sink. That's why you want to wait for it to emerge from these patterns, because until it does, until you see, let me go back to the daily, until you see it clear some of this resistance above 561, we'll call it right now, in heavy volume ideally, which shows you that institutional investors are getting in there and buying. Without that, you really cannot have the confidence that the stock is ready to continue rallying. I certainly don't have that confidence in the short term. In the long term, this does look like a good stock. And let's go back to get a little more perspective on the monthly. So there you have, a little over a year ago, the big decline in 2020. This came back really well. If you look at what happened here in the 12 months since then, I guess that would be maybe 13 months at this point, what you're seeing happening here. Very nice rise, had a very nice 1 year return, and you do like to see that particular history underway. Couple of consolidations along the way. So you had a base over here, has not yet undercut the prior structure low. Let me go back over here, show you. So you had previously, it dipped down as low as 455.23, and you see in the low of this particular structure did not undercut that. So that's a good sign so far. So things are looking good here right now on this stock, just not at the point where you really want to venture a purchase at this point until you see the price start to come up in heavier volume. One more thing I want to add, this is a large cap stock. So you do see, generally speaking, in some of these large caps, little less of the volatility. Many of these growth stocks that just take off and have super runs are often very small companies, less liquid. In fact, I was writing about one this morning for Market Beat called Big Five Sporting Goods. This is a pretty big sporting goods retailer that's in the western states primarily. And you see this has a very small market cap, 412 million, although it's a little higher than when I wrote about it this morning because it's up today. It's 3 million higher than what I put this morning. But you do see this has a beta of 1.79, meaning that it is more volatile. So if you have something like Idexx that is a little more, a lot more of a large cap stock, you do tend to see lower beta, 1.04, meaning it's pretty much tracking with the broader market, a little more volatile than the broader market. You do often see that even with the larger growth stocks, that they might be a little more volatile than the indexes as a whole. So this is a NASDAQ stock. Let's just check one thing here before we go today. The NASDAQ composite, you see that was down for the day as well. We did have Janet Yellen making some remarks today about the economy possibly heating up, so that is scaring investors. So some of what you're seeing with Idexx is very, very likely due to that as well. All right, thank you for watching, everybody. I appreciate you, and I'll be back with another daily stock analysis for you tomorrow.